The opening bell on the first trading day of 2020 is just a couple of hours away, and stocks appear to be starting the year the way they ended 2019, higher. Let's talk markets now, what investors can expect this year. Joining us for that is Jeff Saut, founder of Saut Strategy and portfolio manager and chief investment strategist at Capital Wealth Planning. Also joining us is Tom Graff. He is a partner and portfolio manager and head of fixed income at Brown Advisory. Just for fun, let me start fixed income because maybe that makes a difference to what happens, Tom. We're above 190, wherever 191 on the 10-year. What's your range for 2020? What are you expecting? And will the range be sort of moving a little bit higher, do you think, or not?
Yeah, thanks for having me, Joe. We think that around 190 to maybe 2 or 210 is about as high as the 10-year can go, unless the market starts pricing in rate hikes, which would probably take a lot for that to happen. So I think in 2020, barring a really big surprise, around where we are now is probably about as high as it goes.
Really? That's not necessarily consensus. We've been looking for high, 2.5 or to finally get back to what people call normal, which maybe it's not normal. But so you don't expect that to happen again this year? No 3%?
No, I think the idea of normal rates really needs a rethinking. I don't think the Fed is thinking in terms of rates needing to normalize back to some natural level anymore. I think they're looking for guides from what happens with inflation or what happens with the economy softening to direct their next move. And unless the Fed's going to make a change, there's no real reason for rates to be a lot different in the intermediate part of the yield curve.
So, Tom, does that mean that the big worries about E&P energy companies and their debt coming due, and the big worries about our debt at the federal government and global debt and high-yield corporate debt, all the worries that could come home to roost with a rise in rates, do we not have to worry as much in 2020 about the specter of all those scary things?
Well, I think there's like a lot to unpack there, Joe. I think that if you're talking about companies from particular industries, I definitely think there's risk of softness in certain parts of the economy. And given that companies are fairly indebted, you could have pockets of trouble. We saw that in late 2015 and early 2016 in the energy market. It could be other places. But as far as like a generalized recession, I do think those odds are lower. And I don't think it has a lot to do near term with what happens with our debt. Those are more long-term troubles, not things we need to worry about, particularly in 2020.
All right, Saut, you're on. You can be, you can't be just crazy bullish at the beginning of every year. I mean, it served you well. Oh, I see you're a big, you like the Saints again this weekend? The New Orleans, is that a New Orleans? What is that thing up over your...
Fleur-de-lis. Fleur-de-lis.
You big Saints fan again? You picking them this weekend? No, I know that's not what that is. But, so... Are you as rabidly bullish as you were at the beginning of last year? Are we going to do another 25% this year, or does even Jeff Saut moderate his expectation for gains in the S&P?
Well, I came on here last year around this time and said, 3,200 for year end of 2019. People laughed at me. They didn't think it could happen. I think the S&P will be somewhere between 3,500 and 3,600 by the end of this year. Not as good a year as last year, but I expect the economy to strengthen. I think that earnings are going to continue to come in better than expected. And I still don't see a recession. I mean, I've heard for the past 3 years we were going into a recession, and I don't see it.
30, that's pretty good, Jeff. So you're talking double digits, but not like this year.
Not like this year. But the history, when you've had a decent year like we've had this year, is the next year is up as well. And so I think we're going to be up, and I think we're going to be up to 35 to 3,600 basis the S&P.
Are people starting to not doubt every move higher yet? That's when we need to worry, because they still, for some reason, think everything is overvalued and this can't continue, and we're setting ourselves up for a fall, and there's a lot of air under this market, and it's Fed induced and blah blah, all the stuff we hear all the time. When that changes and people say, wow, things are good, this market's going to keep going, that's when you worry, right? Where are we sentiment wise, do you think?
It depends on who you talk to, Joe. The professional investors are still pretty bullish. The individual investors are still scared to death because they didn't manage risk in 2008 and early 2009. And as Benjamin Graham said in the book, The Intelligent Investor, the essence of portfolio management is the management of risks, not the management of returns. And that's what we do at Capital Wealth Planning. We manage risk, and we do it very well.